Hey guys, Lauren, are you still with us? Awesome. Oh, there you go. Okay, so it's about a minute till. I think we can go ahead and get started. So hi everybody, thank you for joining us for our first Marches for Members event. I'm very excited to see you all here today. We're going to go ahead and get started. Lauren is with Topside, who is the sponsor and the speaker today, letting us know a little bit more how to get our finances under control. So Lauren, thank you so much for being here today.
Thanks for having me. So I have some things to talk to you guys about with commissions and how to improve your credit, which I know maybe you guys know how to improve your credit, but maybe you don't know how to talk to your customers about improving their credit. So hopefully you guys learned something today and that it's useful. I do have, now the last time I did this, I tried to do a game and it was not very successful. So it's just a PowerPoint today, but I do have some, they're called like Mentimeter voting things where you guys will use a QR code. If you're not able to do that, which you should just be able to like use your phone and pull up the camera and then it should take you to that link. If that doesn't work, I'm also going to drop the link into the chat if that lets me do that. So, and if you guys have any questions at any time, just unmute yourself. I'm going to turn my camera off so that I can share my screen because you guys don't want to look at me while I'm trying to read too. Hey, Clay.
Quick comment, if you don't mind. Usually at this point, I feel like the sponsor usually does some type of spiel, but if I'd like to actually just share real quick. I switched over our entire brokerage business finances to Topside last summer, and it's been very successful. And actually, just this morning, I had a little issue on a direct deposit for an agent, and I had Sherry Patterson from Topside who helped me out in 10 minutes, got it all figured out. So it's very nice to have a local partner here. I'm glad y'all are affiliate here with FAR. Thank you.
Thanks, Clay. Now, were you someone that requested that we speak before? I thought you were. Okay, so that's good to know. And he's right, the sponsors usually have a spiel, but I'm an educator. I'm not interested in giving you guys a spiel. We do have someone else that might jump on if I have a few minutes at the All right, give me just 1 minute to get started. I told you guys earlier, if you heard me, I don't usually use Zoom, so just give me a break if things don't go perfect. I shared the wrong screen. Give me 1 second.
Podcast. I haven't listened to one in a few months, but yes.
All right, guys, are you able to see my screen now? I think I finally got it right. Yeah, okay. All right. So I'm working in a different office today, so it kept wanting to share the wrong screen for you guys, but here we go. So we're first going to talk about credit scores, the different types and the different impacts, and how, just like a few tips on how to improve your score. So first, I just have a question for you guys. Does checking my own score lower it? This is where you're going to either use that QR code, or let me see if it will let me, I don't actually think it's gonna let me share that link with you. So I'll give you just a minute to see if you're able to do that QR code. You should just be able to hold up your camera and it should give you kind of like a link to click on. And then we'll be able to see right here the results. So 7 people, 8 people. I'll give you guys just another second. I think there was like 11 people maybe that joined. So it's 50-50. Checking your own score does not lower it. There's actually no impact on it whatsoever because it's your own score. You can look at it anytime. Oh, someone got their vote in after I said it. You can actually check your score at any time and your reports. So there's 2 different, let me check the chat. There's 2 different, oh, there we go. Lauren Burdine was able to share the link into the chat. So there's 2 different things. There's your credit score, which is going to be your number, and then there's your credit report, which is going to be everything that makes up your credit score. So no matter which one you're looking at, it's not going to lower your score. It's not going to hurt it. Some people think it causes like a light. Okay, let's see if I can go back to my presentation. There we go. So the first one I want to talk about is Vantage. Or may not have heard about this. It's pretty new. It started in 2009, which seems like a long time ago, but when we're looking at stuff like this, that makes it still fairly new, and it's not used very often. If you go to places like creditkarma.com, that's where you're mostly going to see it. I tried to do a lot of research before this to see if there was anybody that actually uses a Vantage score to give loans or credit cards or anything like that. And I couldn't find anyone in particular, especially in this area, that did it. Everyone else uses a FICO score. So your Vantage score is made up differently than your FICO score is. And in just a minute, I'll show you what those differences are. So your score is going to be different between the 2. I've had some people say that they're pretty similar, but usually one is much, much higher than the other. So FICO is the one that most places use. That's what we use. It's what I know Wells Fargo uses them. That's what most places use to give out loans. Credit unions, banks, all lenders, they use that. There is a difference though between different versions of FICO. So we have, I think, probably an older version than Wells Fargo does. I'm saying Wells Fargo because I have an old credit card with them. So I'm able to see my scores at different places. And their version is a lot newer. So it's built up of different things. So the score can be slightly different depending on where you are looking. So the things that impact your score are going to be your payment history, your types of credit, credit history, new credit, and your amount owed. So your payment history is going to be if you're making your payment on time every single month to anybody that reports to a credit bureau. Your types of credit, it's exactly how it sounds. I have, say, a credit card and a car loan. Those are 2 different types of credit. A mortgage loan would be another type of credit. it's good to have a variety of different credit. Your credit history is going to be how long you've actually had credit. So this was kind of difficult to explain to someone recently that closed a credit card that they'd had for a really long time just because they didn't use it, and it dropped their score because now it looks like their credit history is very young. New credit is going to be just like it sounds, anything new that you've just applied for. And then your amount owed is, you know, how much you owe, obviously, but it's also based on your debt to income ratio and how much you are actually spending of what you have available to you. So if you have $6,000 available to you and you're spending $4,000 of what's available to you, that's going to lower your score because they want you to have no more really than 20% of your credit that's available to you being used. All right, so I have another little poll for you guys. Do medical bills affect my credit score? So I'll leave that up for a couple seconds. And Lauren, if you are able to, are you able to share that link in the chat again? So 5 yeses, 4 nos. Give it another second, see if anyone else. Oh, actually, it looks like we only have, yeah, I'll give it another second. So if you look in the chat, Lauren shared that so that you can go there if you need the link. All right, so this was almost 50-50. And this is a difficult question because the medical bill itself, practice, doesn't necessarily affect your credit. If you're not able to pay your bill and you let it go for a long time, they might send it to collections, which then it's that collection agency that affects your credit. And that can, anything that goes into collections is going to lower your credit score significantly. And I think I'm bringing this up later, but I'm going to say it now while we're talking about medical bills. Most practices, I actually don't know of any practice that I've dealt with that will not put you on a payment plan. If you call them and you say, hey, I can pay $20 every week or $50, whatever you can afford, they'll let you make that payment. You never have to just not make the payment and have it go to collections because that can really hurt you. Almost everywhere is going to be willing to go on a payment plan with you. All right, so this is going to be the difference between FICO and Vantage. Now, the newer FICO versions, they might change the percentages up some, but this is going to be pretty standard. This is what they're looking at. You'll see on the Vantage score that they have a lot more things that they look at and smaller percentages. What that does is it helps people that might not have qualified before for loans. It tries to help them qualify. But like I said before, there's not a lot of places that'll actually use a Vantage score yet because it's so new and it's not as trusted as a FICO score is. But it was built because there were so many people, particularly young people, that had such low scores. They're just having a problem getting people to actually use the Vantage scores. All right, so ways that you can improve your score. And these are things that you can also share with your customers. If I know that I worked with a mortgage company in the past, and it was kind of hard to get some information from them about what I can do to help my score and get a better loan. And maybe you have a better relationship with your customer and you might be able to, do you guys call them customers? I feel like that we call our customers here, we call them members. I feel like you guys might be more familiar with them and not call them
Clients.
Clients, yes. I knew it was something different than customers. So this is something you might be able to share with your clients if they're having a hard time getting their loan, or if they're looking for a way to build their credit so that they can get a better loan maybe. Paying on time is really the biggest thing. And, you know, be proactive. Tell them, and for yourself, if you cannot make a payment, call the company before that payment is due. Almost everyone will be willing to work with you if you're proactive and you talk to them ahead of time. If you wait until the payment's late, there's nothing you can do there. Don't close your lines of credit unless someone tells you specifically that you need to close some of your lines of credit because you have too much available to you. Don't close any of it, because that affects how much you have available to you, and that affects the length of your credit history, and that could lower your score. So even though maybe you got your first credit card when you were 18 and that interest rate is 75% because, you know, it's that old, which they don't actually go that high. I think it's like 23% is the highest or something. But don't close it. Don't apply for every credit card. This is a big mistake that people do at stores, because you get that 20% off if you apply today, whether you get approved or not. You don't need it. You don't need every single credit card for every single store you go to. Ask for forgiveness. You know, there's been times where people, they missed a payment, it's 30 days overdue, it gets sent to the credit bureaus. They report it as being late, and so that lowers your credit score. You can call them and you can ask them to forgive you for doing that. And a lot of companies will. Some credit card companies will. Some of the bigger credit card companies, they won't. I don't know why. Maybe they just don't care as much. But a lot of places will give you that forgiveness, and they will have it removed as like a late payment. You can dispute things. If there's something on your credit report that you don't think you owe, or maybe there was just a misunderstanding, you do owe it, but you have paid it and it stays on there, you can ask for it to be taken off. You can always, it doesn't matter what it is, you can dispute anything, and you can dispute it as many times as you want. And they only have a certain amount of days, I believe it's 30 days, to respond to that dispute. And if they don't respond, it's automatically won in your favor. And we talked about this before, make your payment arrangements. Companies are always going to be willing to work with you if you talk to them ahead of time. And then paying off collections is one of the biggest things that you can do, because those are a really hard hit on your credit, and you want to make sure you don't have any collections on there. And once you do pay it, make sure it's taken off. All right, so that is all I have on credit. Does anybody have any questions about that before we move on, Clay?
Yeah, just a quick question. I was doing a buyer consultation this past week, and the clients asked me, you know, as I'm giving them some lenders to talk to, they're like, well, you know, when they get this pre-qualification, does it ding their credit to, you know, should they be limiting their interactions with lenders because it dings their credit? And I took a class probably like when I first started in 2014, where I think the lender at that time said that the credit agencies or whatever would kind of give a little bit of a cushion there for mortgage shopping around, maybe like 2 or 3 pulls for pre-qualification. Is that true, or is that been updated, or do you have any idea?
Yep, that's absolutely true. And it's true with anything like car buying, mortgages, anything like that, other than really credit cards. They see credit cards as something that you're just, you know, trying your hardest to find whoever will give you money. But with stuff like car loans, personal loans, and mortgages, as long as you're shopping within like a 30-day time frame, you're given a little leeway. Now, each place is going to be kind of like a soft hit on your credit, but that's not bad. That's really not a big deal, because it's, you know, if you were doing that and you were to come to Topside and you applied for a loan with us, we would be able to see that you applied for three different lenders, and we can see that you're trying to get a home or a car, whatever it is. So it's not like you're trying to get as much credit as you possibly can to go max out all your credit cards. That would be looked at completely different. So, anyone else have a question before we move on? Okay, so I'm going to talk about commissions a little bit. You guys are going to know more about your commissions than I do. I can tell you how to spend it, and I can tell you who to talk to about your commissions, but you guys are really going to know more than I do about these. And so if I'm wrong on anything, I ask you to let me know. I want to make sure I have the right information. So we're going to talk about spending cycles, an emergency fund, retirement, taxes, and then who you're going to call. So save, pay, spend is the pay cycle or saving cycle that I really push all of my members to use, because the chances are, if I get my paycheck and I immediately pay my bills and then maybe I spend some money, I'm not going to save any. And so you want to immediately put some money aside for savings. And that's really important when you're living off of a commission. Now, some of you guys might have second jobs. This might just be like your part-time job. I'm not really sure. And maybe you have a partner too. So your situation is going to be a little different from, I did this as in like no matter what, you're always going to want to save first. Put a little bit towards your emergency fund, regular savings, a retirement fund or savings plan, and then you pay all your bills. You know, that's your mortgage, your utilities, anything like that. And if you have anything left and you don't want to put it towards your savings, treat yourself. Buy yourself a new pair of shoes, whatever you want to do. But I recommend putting most of it into savings if you can. All right, so here we go with another poll. How much do you have saved? And I think it'll give you like 4 or 5 different options. I'll give you guys just a couple minutes with that. Lauren, if you are able to share that in the chat, that would be really awesome. All right, I'm really impressed. 3, 6, and more than 6. All right, so I'm going to go ahead and move on. I am so impressed with this, though, that 4 people have 3 months and then 4 people have 6 months or more. That's really awesome. So with an irregular paycheck, this is what I would recommend. I would really recommend it for anybody, but it's very, very important for anyone with an irregular paycheck. maybe it's not hard because a lot of you guys had this much saved already, but I know it could be hard to get 6 months worth of bills saved up. And that's really what you guys should have if you are single, especially. You should have 6 months worth of savings, which means you're able to pay 6 months of your mortgage, 6 months of utilities, 6 months of any type of insurance you have. That's health insurance, car insurance, anything. Now, if you have a partner, maybe you're able to do a little less. Maybe they have a job with a more regular paycheck. And you guys might have very regular commissions. I don't know how often you guys are selling. Now, one thing I do recommend is if you have to dip into your emergency savings, why not cancel your monthly subscriptions? I have a whole bunch of monthly subscriptions that if I needed to save some money real quick, those would be the first thing to go. And a lot of them don't have like a sign-up fee, and they might even reach out to you and give you a special promotion to rejoin. So I know it's not Spotify, it's one of the SiriusXM. I get letters from them all the time, like, come back to us, Lauren, only pay this much a month. So if you cancel, maybe you'll get a deal on rejoining. That's something you can always re-add. Now, maybe you don't get to watch as much shows because you cancel your Netflix and your Hulu and your Amazon, but it's going to save you, I don't know, $30 to $50 a month probably. And that can be significant if you're dipping into your emergency savings. So your retirement savings, it could be, give me 1 second. So the retirement savings, this might be difficult for you guys because I'm sure that the real estate offices don't have a 401k plan. As far as I know, a lot of them is really ideal of what you want to save from your paycheck for your retirement. 10% is great if that's all you can do, but one thing that I think is a really great idea, if you have a partner that has a retirement plan through their employer, a lot of employers will do a matching amount, a percentage, and they might just do a percentage even if they're not matching. Like here at Topside, we're given a certain percentage whether we contribute or not. Make sure your partner is taking advantage of that. And maybe they're doing a little extra in it for the two of you. And that's where you guys are planning on using retirement from. I do really recommend having your own. I recommend everyone having their own, but that is an option. They could be doing extra for the two of you. All right, so taxes. As far as I know, and I did a little research on this, but you guys probably do not have any taxes taken out of your commission check. It looks like some places might, but no one in this area seems to do that. So you're responsible for your own taxes. 22%, saving 22% of that is fairly safe. But there's a lot that goes into it. So you want to look at your tax bracket, see where you fit in. Are you single, married, head of household, married and filing separately, married and filing together? There's so many different things that go into figuring out what your tax bracket is. So you want to make sure that you are checking that regularly to make sure that you're saving enough. I do think that you are also able to pay taxes not waiting till the end of the year. You can pay out of every single commission check you get. Oh, and I do recommend, if you're waiting until the end of the year, you should be checking mid-year to make sure that you are on target for saving as much as you're going to end up making, because that can fluctuate. You might be in the 22% tax bracket at the beginning of the year, and then towards the middle of the year, you might be in the 24%. So this is from Intuit.com, this tax bracket here. I usually recommend looking at websites that are like .gov or .org, but Intuit is usually pretty accurate. So I have their tax bracket up here, and I'm going to take you to their website. Let's see if it'll let me do that. So I really liked this. It was really quick and easy. I was able to look right here and see that I'm filing single. I can click my income if I want to. I want to say this was maybe the 22%. Yep. So it showed me right here on the right-hand side that my tax rate is going to be 22%. Now, if I think I'm going to make more than $85,000, I go up to 24%. So this was a really great website to look at, and the information was easy. And I went down here. This is where I got that tax bracket from. But if you click on view all statuses, there's so many. And there's so many different options. So you guys want to make sure you're doing the right one for your situation. Kind of flew through this because it goes a lot slower when you're in person. So who are you going to call? Me. You can call me, and I can talk to you about budgeting. We can just do like an spending, see what you should be saving. You can also come to me for savings products. Those are different savings accounts. You can have so many different savings accounts, and I really recommend having more than one, because you can have a regular savings account. You can have one where you're planning for vacation or the holidays. You can have one where it's just your emergency fund. We can also talk about credit tips. And if you're in major debt, we work with a company that I can help refer you to, and we can decide if that is a good option for you. And this is also for your clients. If you have a client that just is not where you think they should be and not where they want to be able to buy a home, send them to me. We can talk, and I can try to help them and move them forward to being able to purchase a home in the future. I recommend all of you talk to a financial advisor. I do these videos on Facebook, and recently one of my videos was who needs a financial advisor. Basically everybody. If you have a job, if you have a family, if you have a home, if you have kids, anything, you should talk to a financial advisor. They can do all types of stuff with you. If you need a retirement plan, they can figure that out with you. If you don't have health insurance, they can figure that out with you. We work with a financial advisor here. His name is Scott Pettyjohn, and he's with Topside Financial, which is a CUSO, which is a credit union service organization. And he's fantastic. He can set up any of that type of stuff with you. It's 100% free to meet with him. And I just really recommend meeting with a financial advisor, whether it's him or whether it's someone else. And I can share this information through email too, if you need it. But that is, I think, all I have on commissions. If anyone has any questions. This went so fast.
This is awesome, Lauren. Just a couple comments, I think, if you don't mind. On the tax part, as agents, as 1099 agents, we are, of course, getting the full amount. I think a best practice is to, yes, take out that percentage, whether it be 22, 24, 28%. Each time you get a commission check, and dump it into a savings account, the do not touch savings accounts. And then, of course, we have to pay I think once you start paying your estimated quarterlies, that's where you pull that money from, and it's not, you don't have to create that money out of thin air, I guess, because you're already committed to. It's almost like it doesn't go in your business checking account; it goes into your business savings account. And just the other thing, I mean, yeah, I'm not a tax advisor, I'm not a financial planner, but you know, my tax advisor has actually steered me towards what's called a SEP IRA, which is something that, you know, it's a like Roth IRA stuff where you can, you know, put that stuff in and then it's, you know, not taxed once you take it out of retirement. But a SEP IRA is a way for me to be able to say, okay, I had a good year, but I don't want to pay taxes on all this, and I can go after the tax year and go back and fund that retirement account for X amount of dollars, which then is a tax deferral until when it comes out. And it's been really, it's relieved me of some stuff come tax time over the past couple of years. So it's a good little tool to look into.
Yeah, I bet. I can't imagine what tax time is like for you guys. It's in my position, it's super easy. It's just me and my regular paycheck, and just, it's very easy. So I can't imagine what it's like to you know, have to figure out your own taxes and everything like that. But I do, Clay, like you said, I really, really recommend putting that money somewhere separate, because it's so hard to, even people that owe taxes and it's just a small amount of money every year, it's so hard to come up with that cash if you aren't really thinking about it ahead of time. So if that is all you have, I have one more of the little surveys. I'm not gonna pull up the responses, but if you guys could be honest with this one, it is a survey about me and the presentation today, and they require it for my job. So just be honest. I don't see your responses or who said it or anything like that. And then Lauren Bruning is here with me too. She actually is going to give you that spiel that I don't necessarily care as much about, but she does. So I'm going to pull up that last QR code, and then I'm going to let her talk while you guys are doing that. Thank you, everyone. She's coming. We were in a different office.
All right, well, good afternoon, everyone. That was a lot of fun. I learned a lot. I hope you don't mind me sitting in on your presentation today. But as a member-owned not-for-profit credit union, we're truly here to support you. I don't know if you guys know the difference between a bank and a credit union, but it means that we're not-for-profit. It means we serve our members. I really loved hearing Clay's testimony earlier. It was a really great feedback to hear about. And, you know, because that's our heart. We're here to serve you. Some of the ways that we do that is we offer 5% on the first 500 for students until their 20th birthday on our Youth Saves account. We also have great things like $5 for the first 4 A's on the report card every year. If any of you are military, retired, dependent, active, your family has someone that's active, we have an 8% on the first 500 savings account that you can take advantage of. And of course, if you have any spring plans for your yard, maybe you are just ready for this cold weather to get gone and you need a new lawnmower or tractor, or maybe you just sold a beautiful farm and you want to mention it, we have loans right now starting at 4.99 before the 15th. And going forward, if you have any auto loans, you can refinance with us and get 1% cash back plus our low rates. All of those things are available on our website. I also want to mention to you that we have a phenomenal business lender right now on staff. Her name is Kathy Roscoe, and she is here for any of your needs. If if I didn't have to come into a branch, I really wouldn't. You can take advantage of all of these things right on our website. We have a great app as well. You can take pictures of your checks and have them deposited into your account. You can do bill pay through that. You can even do pay a person if you don't want to use Venmo or Cash App. We have that included right in our mobile banking. We have 2 locations here in Fredericksburg, one next to Almonds Barbecue on Route 1 in downtown, and then of course our Mazaponics branch across from the Publix in Cosner's Corner. Thank you all for joining us today. If you'd like to open an account, you can do that on our website, and it only costs $1 to join. Thank you.